Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Megan Brantley, VP of Research at LikeFolio. Welcome back to the show. Happy Friday, Megan.
Thanks for having me, guys. Happy Friday.
Yeah, good to have you back here. Expedia, we're talking, it's down just over 1% so far this year. It's had a good run so far the month in September, but a lot of travel stocks have. You know, I always use Expedia to kind of maybe price out things. I don't ever really book through it. But they've got a lot of different entities that they own, whether it's Hotels.com and Vrbo and some of the others. What kind of data do you have on this one?
You know, whenever we look at Expedia, like you said, there are a ton of brands underneath its umbrella. But for this, the three, I would say, power brands that we focus on that tend to drive the most consumer mentions are Expedia, Vrbo or VRBO, whichever you prefer, and its Hotels.com banner. And whenever we look at these, you know, this is a company that it has a new-ish CEO, right? And it's really trying to revitalize those brands that I just mentioned. And whenever we look at the digital traffic, we just aren't necessarily seeing signs that these brands are gaining traction quite yet. Expedia at large seems to be underperforming other travel peers whenever we look at it versus an aggregator like a Booking.com, whenever we look at it versus Airbnb, and whenever we look at it versus even hotel chains specifically. And what we see whenever we look at mentions is a lot of what you just talked about, how consumers might use Expedia to kind of price out or look at potential bookings and compare prices, but then a lot of them are opting to book directly with the chain itself, the airline itself, the car rental company itself, which doesn't necessarily help Expedia. So this is one of those instances whenever you're looking at year-over growth, you want to see, okay, you know, the stock is up, I think, 17% over the last 3 months. Does the data justify this? And we just don't see a justification here. In fact, whenever we look at these web visits on a month-over-month basis, when you start to break it down, how is September doing versus August? How is August doing versus July? We see a pretty significant deceleration. So a little bit of a weakening travel demand scenario following out or breaking out, at least in terms of how our data looks for Expedia specifically.
You know, Megan, this company's gone through a lot of changes lately. Starting in 2020, they took all these different brands that seemed to scatter, Expedia, Hotels.com, VRBO, they put them under one single technology platform, which gives you easy access to all three. Now that's taken a while, but they're there now. And so that is a big part of what seems to be firming up this stock's their performance. Not only that, they've been buying back a ton of stock. Their business-to-business strategy is starting to grow and show signs of forming. I think this company is on the verge of something. It's run a long way. It's already overbought, but they seem to be in a pretty good footing with some really good brands that people can use. Tom uses them to do his research. That's one way. But other people like VRBO, that competes with Airbnb. And Hotels.com gives you like all the price points. Don't you think that this company has set up the foundation for a pretty good future going forward with all these brands under one platform?
Yeah, we like the renewed focus. Another element that kind of ties in these brands is its One Key loyalty program. This is kind of another element it launched in July to allow consumers who book through either Expedia, Airbnb, or not Airbnb, VRBO, or Hotels.com to collect the same loyalty points. So that way the loyalty points aren't fragmented across all of these different brands so that they really can perceive value. And I think that long term, that's certainly the play. You want to incentivize consumers and give them a reason to kind of build loyalty, build these perceived points to put use to, future trips and things like that. So I think this is definitely a step in the right direction. We do see signs of more consumers searching for and talking about that One Key loyalty program. So that is a bright spot moving forward for Expedia. But in terms of just overall digital traffic, how it's performing versus peers in web visits right now and overall happiness visits right now, that turnaround isn't really taking hold quite yet, but the plan is certainly there, and the plan looks very positive.
The plan looks positive. Now, I always talk about Expedia in the same breath as Booking.com, right? And that stock's just off all-time highs. For that stock. Is this maybe an execution thing? Because TD Cowen just downgraded the stock. They lifted the price up to where it's trading right now, but they put it to a hold from a buy. But this is all based on the consumer, and it looks like your data, Megan, kind of agrees with where the stock is compared to maybe the hotels and maybe Booking also.
Yeah, you're exactly right. Our data is in agreement there. And one of the biggest differences that we see whenever we look at Expedia versus a Booking is whenever you look at both companies' international exposure. Expedia generated, I believe, about 63% of its revenue and sales via domestic travel here in the U.S. And when we look on a macro level of what is driving travel, where is the bright spot here? It's actually in international travel, and that benefits a Booking, which has a much larger international exposure. So I think Expedia is doing the right things to expand its international exposure. If you were to look at its domestic to international ratio just 2 years ago, it was almost 70% domestic versus 63% now. So I think that it's definitely taking steps to get there. But for now, it makes sense to us that Booking would be overperforming, not just because of execution, but also because of the underlying travel trends that are driving the consumer right now.
Now, with the earnings not until first week of November, if you guys had an earnings score here, it's up 7% so far this month. What would your earnings score be?
I think that right now, especially considering the recent stock move, our earnings score would lean bearish. We're also waiting to see the company reap the fruits of its labor in this turnaround story. A lot could change, though, between now and November, so we'll certainly be monitoring in real time to see if things kind of shore up in the meantime.
All right, great data, great stuff as always, Megan. Have a great weekend.
Thanks, guys. You too.
All right, that's Megan Brantley, VP of Research at LikeFolio.